One of the biggest mistakes crypto investors make over and over again is failing to take profits. In every bull market, people watch their portfolios explode in value. They feel like geniuses. They start making predictions about Bitcoin going to $500,000 or their favorite altcoin doing another 10x. And then, just as quickly as it all went up, the market crashes. Suddenly, that life-changing portfolio is gone, and they're stuck holding bags through another brutal bear market. Taking profits is one of the hardest things to do in crypto. It's easy to buy, but it's much harder to sell because it goes against our emotions. So today I'm going to show you exactly how to exit your positions in a smart way without regret. We'll cover the best profit-taking strategies, how to spot market tops, tax implications, and the safest ways to off-ramp your crypto into fiat. By the end of this video, you'll have a solid exit plan instead of making emotional decisions when the market is already turning against you. Let's start with the biggest question. Why is selling so difficult? The reason most people don't take profits is psychology. When prices are going up, people get greedy. They convince themselves that the market will keep going up forever. They see people on Twitter posting million-dollar gains, and they don't want to sell too early. When the market starts crashing, those same people freeze. They wait for the bounce that never comes. They tell themselves they'll sell when it recovers, and then before they know it, they're back in a bear market watching all of their gains disappear. The key to avoiding this is to sell into strength, not weakness. Selling when the market is euphoric feels counterintuitive, but that's how smart investors lock in gains. You don't want to be selling when everyone is panicking. You want to be selling when everyone is euphoric. So how do you actually execute a smart exit plan? Well, the first rule is never sell all at once. Instead, use a phased exit strategy. Here's how it works. Instead of trying to time the absolute top, which is nearly impossible, you set multiple price targets in advance and sell a percentage of your holdings at each level. For example, sell 20% when Bitcoin is up 200% from your entry, sell another 30% when it's up 400%, sell another 30% when it's up 600%, and keep the remaining 20% as a long-term hold in case the bull market runs further than expected, or if there's just any amount that you are never planning to sell. This strategy removes emotions from the process. You're not panic selling in a crash, you're systematically taking profits when the market is strong. A great way to automate this is by setting limit sell orders on exchanges. Instead of watching the charts every day, set your targets and let them execute automatically. Now, how do you know when a bull market is actually peaking? Well, one of the best tools for spotting market tops is on-chain data. Here are 3 indicators that have historically signaled that the market is overheated. Bitcoin exchange inflows spiking. When long-term holders start sending Bitcoin into exchanges, it often means they're preparing to sell. You can track this using CryptoQuant or Glassnode. The MV/RV ratio going above 3.5. Now this metric compares Bitcoin's market value to its realized value. When it crosses 3.5, it historically signals a market top. You can check this on Look Into Bitcoin. The Fear and Greed Index at extreme greed, when everyone is ultra bullish and the index hits 90 or higher, it's often a sign that euphoria is peaking. These indicators don't guarantee the exact top, but they give you a strong warning when the market is getting overheated. Now, before you sell, there's something you need to think about, and that's taxes. Now, this can differ depending on your own jurisdiction, but in most countries, selling crypto is considered a taxable event. This means you could owe capital gains tax on your profits, especially if you've been holding for less than a year. A smart way to minimize taxes is by selling in smaller chunks over time. Instead of realizing all your gains in one taxable year, you can spread it out over multiple years. Another strategy is harvesting losses. If you have some crypto positions that that are down, you can sell them at a loss to offset the taxes on your gains. To track your tax liabilities, I recommend using tools like Coinly or CoinTracker. These platforms automatically calculate your gains and estimate what you owe. The next step is off-ramping your crypto safely. If you're moving large amounts of money from crypto to fiat, you don't want to do it all at once on a centralized exchange. Instead, use a tiered withdrawal approach. Convert some crypto into stablecoins like USDC or USDT first. This removes price volatility but keeps you in the crypto ecosystem. Move stablecoins to regulated exchanges with strong fiat on-ramps like Coinbase or Kraken. Withdraw in smaller amounts over time instead of one large transaction to avoid banking restrictions. If possible, withdraw directly into a high-interest savings account or investment portfolio so your cash is working for you instead of sitting idle. For even more security, consider using crypto-friendly banks like BankProv or Revolut, which are more accommodating to large crypto transactions than traditional banks. To recap, taking profits in crypto isn't just about making money, it's about keeping it. The best way to do this is by selling in phases, not all at once, using on-chain data to identify market tops, minimizing taxes through smart planning, and withdrawing funds safely. The worst thing you can do is hold blindly, hoping for higher prices forever. The market moves in cycles. Every bull run has an ending, and the people who exit at the right time are the ones who come out on top because they can take the most advantage in the next bear market. Now, I want to hear from you. Do you already have an exit strategy in place, or are you still figuring it out? Let me know in the comments. If you want to learn how to build a profitable, long-term crypto strategy, check out learningcrypto.com. It's where we teach real, practical crypto investing without all the hype. Thanks for watching, and I'll see you in the next video.